So you want to know, is now a good time to sell your home? Well, in this week's edition of the National Housing Market, we saw the supply constrained market we've been talking about for a while release some inventory, and demand is keeping right up with it. So stick around and I'll share with you the changes that we've been seeing over the last couple weeks that are leading to good signs for the housing market. Well, thanks for sticking around. And as you can see, as always, we're bringing you the week-by-week numbers, which is what really will help you get closer if you're looking for logical intelligence to time the market. Now, most people have an emotional reason for making a change, and then you want to back that up with the right time logically to take advantage of the current market conditions or opportunities that exist. Right now, what we continue to be in is a supply-constrained market, which creates opportunity for anybody wanting to sell because there's less competition. The question, though, is where is demand? So as you can see here, inventory rose 2% this week to 422,000. We saw that first change last week as well. Inventory rise 6%, meaning right now was the start of the increased inventory that flooded the market across the nation that led to a lot of homes staying on the market and requiring adjustments to value to get under contracts, significant numbers, meaning some markets were 40%, 50%, upwards to 60% needing price reductions, which will close today with how that number has actually decreased to lower than 2019. So as we start to see the inventory rise, what also happened as you follow this graph here is we saw the inventory rise as well, meaning the inventory of immediate sales. So 85,000 homes on the market, 99,000 this time last year. So we still have less inventory than we did last year because the demand now is also showing that 20,000 of those 85,000 are under contract. So what we've been trying to figure out is as we receive more supply, what will the demand do? And the demand is responding well to it, saying we've been waiting for more homes. Now people have more options and they are contracting as there are increased number of overall sales. Now, the challenge that many people presented is, what if these homes come to the market in form of distress? The challenge is that we just received from Black Knight a record low homeowner delinquency report right now, meaning that homeowners are in amazing positions within their mortgages, that we have record low delinquency rates. So no time in the near future are we expecting distressed homes to be that supply. It's going to continue to be limited supply based off people who are making the decision to sell, not people that have to. Now, as you also start looking at this graph of total homes, active listings versus homes under contract, what we were trying to see is, are both lines growing, and is the pace of sellers wrenching up? And the reality is yes. As you can see here, as available supply inches up, so do sales. 377,000 homes are in contract. You can see during the frenzy, there were more homes pending than even on the market. That dark red line you could see. And then obviously, as you start looking at July, August, September, and then steady through the beginning of the year, you start to see this light bar graph start to decrease, which was the excess inventory on the market without a pending contract. So right now, we're starting to see both those numbers grow, which is a good sign for a normalizing of the market, which is we have more supply coming. But the good news is we are also growing in the pending, which means that people are transacting and homes are not sitting in the market, which would lead to potential decreases in pricing. What this is showing is that pricing will continue to normalize and or elevate based off where the demand is, which we are still looking at based off mortgage rates. So now what's interesting here with the percent of properties with price reductions, you can see the housing demand continues because the price reductions fell all the way down to 29.2%, which is lower than where it was in 2019. Now this number should bottom out here by the end of May, but we'll continue to follow this every week, because if those price reductions continue to decrease, that only shows the relevancy for demand. And as we start looking at limited price reductions, that means home price appreciation will continue to rise. As I was sharing earlier, if you remember last year, look at how that number skyrocketed back in May, all the way through the remainder of the year, which goes back to show that 40% across the nation needed a price reduction, but you remember there were certain pockets that were all the way up to 50 to 60%. So to close, the median home list price is still ticking up a little bit at $445,000, the median price of new listings. And remember, why is this number a little different is the median price and median price of new listings is what is new coming to market. And a lot of those are going to adjust seasonality to year-over-year numbers versus just the overall median price of all listings. As you start to also look at, though, this report here, which really is more of an indicator of where future pricing will be, the median price of homes in contract, all right, was 1.3% below last year. Remember, we saw nothing but a continued rise through 2022 from the beginning of the year. Then we started to see that decrease because remember, this is pending. And as we start looking at pending homes take 30, 60, 90 days to start to report. So what you'll actually see is that come June, July, or August, we will probably see that the pending median price is at or above where we were last year, which is just, again, another relevant piece of information showing that the demand for homes is keeping a certain price or floor not being breached, meaning that we will continue to see home prices either stabilize or normalize, or in certain segments increase based off of how the challenges to that individual market were over the last year. So the important part when you look at this, though, is that as the demand keeps home prices rising or appreciation growing, is that we also have to take into account many other economic factors over the next year that could lead to change in 2024. But for the rest of 2023, most this money is in the bank because we will only continue to see, as you can see here, the price of these pending homes increase due to the rate at which they decreased this time last year. So the supply and the demand is there, which would answer the question, is now a good time to sell? Well, the best time to sell is when the demand is there, as well as when there is a lack of inventory or lack of competition. And that's exactly what is happening right now. As always, if you want to talk further about your specific market, schedule a 15-minute strategy review. If you're out of state, across the nation, and you're looking to get connected with the top 1% of agents in your marketplace to advise you on these conditions, let me know, and I will get you a great point of contact. From me to you, as always, thanks for giving me a couple minutes of your time. We'll keep you updated next week as you'll get our First to Know Denver Metro Market Update, as well as the National Housing Weekly Market Update.